Hi, Lenore here. Let's finish up this problem. So when we left, we had just put in the adjustments, and I'm going to show you, well, there's a couple of things that are different now. I've taken out those extra spaces in between accounts so that you can see the whole worksheet or spreadsheet on one page. So first and foremost, we have to bring over these balances. That's what this is called, bring over the balances. So we're going to take debits, add any debits in the adjusting column, subtract any credits in the adjusting column, and then the result will be here. If there are no adjustments to the account, we just bring over the amount from here straight to here. Okay, so cash came over easily. Now we have laundry supplies, which is an asset, increases with the debit, decreases with the credit. So I've taken this number and subtracted that number. And that's our new balance. Again, for prepaid insurance, we add the $9,600 and we subtract the credit, or $5,700. Again, if there's no activity, we just bring the number right over. So if it's a debit balance and the adjustment is a debit, the result will be a debit. We add those two together. If the number is a credit and the adjustment is a credit, you add those two together. So debits plus debits equal debits, credits plus credits equals credits. If the number is a debit and the adjustment is a credit, we need to reduce that number. So debit minus credit equals debit. If it's a credit and we reduce it with a debit, so credit less debit equals credit. So just keep those in mind. And it does take a little while to remember. So don't feel bad if you can't remember right offhand. So here's a situation where we had nothing in the unadjusted trial balance, but we had an adjustment. And remember, if it's a credit on the adjustment side, it's going to be a credit on the adjusted trial balance. Situation where there's just a credit, another credit. Here's dividends, which if you remember is contra equity, means it moves in the opposite direction. So here's the revenue, there's no adjustments to it. But here's a situation where wages expense, we had a dollar amount and we have a debit adjustment. So we add those two together. Debit plus debit. Credit plus credit. If they don't match, if you have a debit and a credit, that's where you're going to have to subtract one from the other. And here are the accounts where we didn't have anything at all in the unadjusted trial balance, so we just bring those over. And look, we have an error somewhere because this is 4.8 and this is 4.5. I did not do this on purpose. These are things that sometimes happen. So here's how we would find the error. We take our debit balance and subtract our credit balance. And we can see that the wrong amount is 31,900. 31,900. And if I were to look, do I have anything that's 31,900? I don't seem to. Well, here's part of the problem. I took my credit balance and I forgot to add the credit. So that has changed the number a little bit to 25,600. Again, we'll look. I don't see any 25,600. I don't see any 25,600. So now we'll just go through and make certain that I got my items in the correct column. So cash, no change. Laundry is debit, less credit. And insurance is debit, less credit. Equipment has no change. We corrected, right? We corrected our accumulated depreciation, so credit plus credit. No change. That's a credit balance. No change. Ah, here it is. I accidentally picked up the wrong cell when I was bringing things over. Voila. So now my debits equal my credits. And that's exactly what I would expect you to do if you came up with an error. Subtract the debit from the credit balance, and then hopefully you can go through and find the error. Now we're going to do the closing journal entries. And a few of you have sent me questions about this. We close the year. We only close at the end of the year. So in this situation, the end of the year is June 30th. So we close the revenue accounts, we close the expense accounts, and we close the dividend accounts. So we close revenue, remember R. We close expenses, remember E. We close dividends, remember D. So we're going to close the red accounts. Okay, the first one, it's a 4-step process. In this particular book, you can find different methods. But the first one, CJE1, is to close revenue. I'm going to put revenues because sometimes you do have more than one. So that will be, if we're closing it, it's normally a credit balance. We need to close it with a debit. So let's do that. We have a debit to the revenue account, and we use the exact wording. We do not just call it revenue. If we had more than one revenue account, we would list them all. And then the credit is to an account called income summary. Please read about it. It is a holding account. So we're going to debit that. Oops. It looks like I have one too many zeros there. Decimal zeros. And we're going to credit that same account into income summary. So my explanation to close revenue. Let's put this in parentheses for you. Let's make it purple. Okay, the second journal entry, or CJE2, is to close expenses. So that means we have all these expenses right here. If they have a normal debit balance, to close them, we need to credit these accounts. So in this, excuse me, did I put a little line under there for you to make it easier? No, I didn't. We'll do it now. So we need to debit income summary. And I just write the account name in there for now. And then we're going to credit all these expense accounts. It's best to do it just in the order that you have it. And I'm going to take a little shortcut. I'm going to just do a copy paste. So I've listed them all. And if it's a debit balance, we need to close it with a credit. So we're going to credit wages for 126,300 and all the others. Whoops, I missed one. Okay. Now, the income summary amount is the addition of all these. So if you understand Excel, you're going to understand what I'm doing here. I'm summing up all these dollar amounts, and that's the debit. To close expenses. To close expenses. So RE. And I said it's actually RED. Those are the accounts we're going to close. The next step is actually to close your income summary account. So I like to start with a T account. I'm going to create my T account right here. And CJE3 is to close income summary. So there's my T account. So let's go back. There's a credit in income summary. Let's put a line under here just to make it a little easier for you to view. So there's my credit. Here's my debit. Right? So there's a debit from CJE1. Here it is. There's a debit from CJE2 right here. Now, to close income summary means that we get the balance to zero. That's what closing means, getting the balance to zero. So I'm going to put a 0 in there. So I have a credit, CJE1. I have a debit, CJE2. And I need to get this account to zero, so I'm going to need another debit. Easiest way to remember is once you have your T account, start with your credit, subtract your debit, and that's the amount, $10,900, that I need to close with CJE3. Okay, that's the CJE3 adjustment amount. So I'm going to show you that journal entry. It's going to be a debit to retained, a debit, here's the debit amount, to income summary. And it's going to be that dollar amount, $10,900. And then a credit to retained earnings, $10,900. And that's closing income summary. Now, if you've taken Accounting 100 or perhaps taken another financial accounting class, you may have a 3-step process, you may have a 2-step process. They're not wrong. It's just your author, whoever wrote the book, it's their preference. The last one, as I said, so we've closed revenue, we've closed expenses, we've also closed income summary. The last one is and you can find these in your book, CJE4 is to close dividends. So dividends, as we can see right here, is normally a debit balance. So to close this account, to get this account to zero, we're going to need a credit. So we know we have a debit and we know what our credit is. So let's put the credit in first. The credit is dividends and the amount is $10,000. If I know what my credit is, then I know what my debit amount is, right? Because debits have to equal our credits. And the account that we use is retained earnings. So with this journal entry, I knew the credit and the account, right? I knew the credit dollar amount and I knew the account because I knew I had to close this, get this to zero. Therefore, I needed a credit. So I put the credit in first and then kind of went backwards. I leveraged what I knew to be true. So to close dividends. Now, I've told students different ways to remember the order, things like that. And normally what I do is I draw this silly little picture on the board, and it's a raindrop with a little elephant in it, little elephant in the raindrop, and it's the month of December. Silly, I know. So I tell them the R, which stands for revenues, in this silly little sentence is remember. Remember elephants. The E should hopefully remind you, E in expenses. Remember elephants in In hopefully reminds you of income summary. And the last word in this little sentence is December, which hopefully reminds you of dividends. So this is one way, just one way, to remember the order of closing. Remember, close revenue first. Elephants, close expenses next. In, close your income summary next. And December, close your dividends. Remember elephants in December. So those are your closing entries. Remember, you only do them once at the end of the year. And please read about it. So with that said, Lenore out.